Welcome to the CFA Level 1 practice test. Domain, Equity Investments. Part 4. Does this statement describe a flexibility option or growth option? A. Inaccurate. This scenario describes a growth option. B. Inaccurate. This scenario describes an abandonment option. C. Accurate, as flexibility options include the ability to expand. D. Not applicable. Answer is A. Inaccurate. This scenario describes a growth option. Which asset is best valued using Monte Carlo simulation? A. A non-callable preferred stock with fixed dividends. B. Common stock of a mature company with stable dividends. C. Equity stake in a project with path-dependent cash flows and multiple real options. D. None of the above. Answer is C. An equity stake in a project with path-dependent cash flows and multiple embedded real options. What is a key characteristic of informational market efficiency? A. Prices are driven by investor sentiment. B. Prices fully and quickly reflect all available information. C. Prices exhibit predictable patterns for profit. D. All of the above. Answer is B. Security prices fully and quickly reflect all available information. How does the risk profile of a passive equity strategy differ from a typical hedge fund? A. More reliant on managers' alpha generation. B. Lower transparency of holdings. C. Linked primarily to systematic movements of the benchmark index. D. Not applicable. Answer is C. Passive strategy risk is mostly linked to systematic benchmark movements. What is a fundamental assumption of the Gordon growth model? A. Dividend growth rate exceeds required rate of return. B. Required rate of return exceeds dividend growth rate. C. Company reinvests all earnings. D. None of the above. Answer is B. Required rate of return exceeds the constant dividend growth rate. Which valuation method suits a tech company with no dividends and negative earnings? A. Dividend discount model. B. Price-to-sales ratio. C. Price-to-earnings ratio. D. Not applicable. Answer is B. Price-to-sales ratio is most appropriate for firms with negative earnings and no dividends. When does an equity market index provider perform a reconstitution? A. When constituent prices alter target weights. B. When weighting methodology changes. C. When a constituent is acquired and delisted. D. None of the above. Answer is C. Reconstitution occurs when a constituent is acquired and delisted. What is the best description of adjusting multiple variables to assess recession impact on valuation? A. Stress testing. B. Sensitivity analysis. C. Scenario analysis. D. Not applicable. Answer is C. Scenario analysis adjusts multiple variables to reflect an economic outlook. Which statement about goodwill impairment is most accurate? A. Impairment reduces shareholders' equity. B. Total assets are unaffected. C. Net income increases. D. None of the above. Answer is A. Goodwill impairment decreases shareholders' equity by reducing assets and net income. How does the call feature on callable shares affect investors compared to non-callable shares? A. Enhances voting rights. B. Limits upside capital gain. C. Establishes share price floor. D. Not applicable. Answer is B. The call feature caps investor capital gains beyond the call price. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.